It should be fine. All right, T. So yeah, guys, like I said, I wasn't planning on um doing a call today. I was just planning on working on the workshop and continuing Zooms next week. But I think a lot of people were a bit confused with the workshop. Let's I'll probably cover that here in a bit, but let's go ahead and go through this quickly. Like, number one, this is not free. Like, this is not free. It's not meant to be free. It was never like I never said it was going to be free. I don't know where that confusion came from. Like, look, I do these webinars for free. I do the courses, like I have the courses up for free. I do a lot of free case studies, like relatively like maybe like once a month ish, right? But I'm not gonna make like anything else above that. I probably will not make free. I was planning on maybe making one of the ebooks free, but nah, I don't think it's worth doing that either. Like I think it's kind of you guys have enough like from a free standpoint to kind of learn everything, although it might take some time, but that's kind of the point. Like if you're going to go through all of our stuff, there's like years of content, right? Which is going to take a very long time to learn, but you will learn eventually everything if you go through it. But however, if you want to cut that time, then that's the point of like the workshop. That's the point of the books. That's the point of the other stuff, right? Like the education is technically free, but the additional stuff is it has to be paid for because it's more of a convenience. It's like we are reiterating what's already being told in the webinars, but to save the time of rather than watching 2 3 years of webinars, you could just get on a workshop and you get ahead, and you save yourself months of watching. You know what I mean? And not to mention, like once you understand this stuff, the all the foundational stuff, then you come to the webinars with a deeper understanding of what's going on, and you kind of just go from there, right? So no, this is not free. Let me go ahead and write this down. Not free. Like you say here, it's I'm aiming for like 2 hours. I hope I don't go too far above that. um, because I'm going to be going through the presentation and I'm going to be going through so I'm pretty much just gonna give you guys like a couple of live examples, right? Like that's going on right now as of the closure today, and let you guys see that and see how that plays out over the next week. And we can discuss different biases for different levels of structure, whether you are a scalper, intraday swing trader, right? And on top of that, the recording is included. I have to figure out how I'm going to get that recording. That's another task for today. Right? And there is a pretty much like it's gonna be like an ebook, kind of how the LGC blueprint is set up. I'm gonna try to do something similar like for the workshop. So yes, the presentation is gonna have content and all of that stuff, but all of the full details are gonna be in the workshop document itself. I probably won't share the presentation because I do want to use like the same structure of the presentation for each webinar. But either way, like the workshop document has everything that you guys need. And I'm gonna include all the definitions or all the details that I possibly can. Like if you guys have any of the ebooks that are paid for, then that's pretty much a similar structure that I'm wanting to take with this. And it is $100, which is very cheap. Like I think this is very cheap for what I'm gonna be doing. I could have done like $30 50, but at that point it's not really worth my time, honestly. Um it's really cheap, so not to mention, if you are a private member, like I already gave you guys, every member gets 25% off of all workshops just because you're a private member, right? So if you're a private member, um, right? So if you're a private member, then you're probably, yes, a private Endure member. Yes, brother. Yes. Like there's no other private members. There's no other group. Can we buy the workshop recordings also? I'm thinking about it, bro. But I mean, it like let's think about this. Like if I do like I'm planning on doing every workshop to be like $100. Like I'm probably just gonna set all the same. That's why I split it up into three, and I tried to put like an equal amount of information in each one. Like if we look at the oh shit. Oh, whoops, sorry. If we look at the coming next here, right? So the point of cohort one, the point of workshop one is everything structures from solidified points to multi-level structure to fractals and anything related to structure, right? And model and number two is focused on the four models, right? The four models and their variants, right? Because obviously the suite model is like the first three models plus like an unsubstantial new high, and then there's variants of the sweeps themselves. So this is primarily meant for everything trading model related, and I'm gonna probably include like models within models and like anything related to models, right? And then three, this is the toughest one that this is why I'm doing this one at the end because it's the toughest one to build. And it's more so like the going from concept to model and trying to bridge the gap between what do you have to do, what do you qualify as a good definition for a concept, and what are you going to then do with that concept? How are you going to mix those concepts into potentially making a model? And then what is the approach to take to even trying to make that model, right? Because you guys know like an LGC is a failed move, but you can't really see like to interpret a move as a failed move is a different mindset than somebody trying to combine concepts into a model, right? They're two completely different approaches. So each workshop is dedicated to its own individual just category itself. Like if you want to focus solely on structure, you can watch this. If you only want to focus on the models, then you can only look into this. And then if you want to look into the model creation side, then that's just this. But this one will only reference maybe like one model and maybe some structure rules. Like you will not find cohort one, cohort two information in cohort three, right? To just get that clear, like I will not be reteaching the stuff from V1, V2 into V3. It doesn't make sense because then people would just only pay for one, right? So each one, fuck, I did it again. So like the point is like each one is supposed to be like $100, right? But if I was to sell them all collectively, like I wouldn't sell it for $300. I would sell it for more. I would probably do like $400 for like all three together, like a month after I've done them, right? Because then at that point, then I would have to figure out how I would have to do it with the private members, right? So then that's like another problem. So if you pay for workshop one, you don't even have to show up. Like, I mean, obviously, like I want you to show up because we're gonna have like Q&As and stuff, right? But you don't have to show up because either way, you're gonna get the recording included, regardless, you know. But am I gonna sell these together as a whole after? Maybe, probably. But I think the only way for me to make it fair is I have to make it more expensive, and it could even be like $500 because there is gonna be like it's like everything, you know what I mean? Like I'm doing my best to include every single aspect that I can. And that would mean that you get 3 2-hour sessions, three very long PDF documents with like all the information. Um, yeah, basically. So like 6 hours of content. Who even knows how many PDF pages I'm gonna come up with because it's probably gonna be a lot. Maybe like 100 to 150 pages total. So yeah, do we have any questions with this? Is there any more confusion? with anything workshop related? No, no. Why would no? Why would we? Why? What is the reason for a separate group? Don't compare my workshops to like what other people do. No, 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 no. There is no additional group afterwards. No, because like it's only going to be like 10 people. You know what I mean? Like what's the point in that? Like here, actually, you know what? Here's what I can do. I won't add this to the notes, but for people who actually purchase this, I'll give them a discount for the whole thing. Like I'll give you more than $100 off for like let's say there's cohort 1, 2, and 3, and they're $100 each. So I'll do like 125 to like 150 each, right? Collectively to subtract from the main thing. But yeah, no, I'm gonna do everything via email, bro. Everything via email. Every document's gonna have like its own signature. I'm gonna make each one different so I know who has which. So like if anybody leaks anything, then I'll just ban you for life. Like, like with PDFs, it's really easy to like track down. But yeah, I'll collectively like since I have a note of who purchased which one, right? I'll just add this type of value for purchasing this toward the main group, right? Which is like the main Endure Premium group. Cool. So yeah, so we have any more questions or concerns with this? Subscribed yesterday. Awesome. Yeah, bro, I did see that. So I'm gonna be sending emails out later today. I'm gonna send like the Zoom meeting and stuff like that with the password and all that. So don't worry, I won't be weird and like make you guys put your cameras on or stuff like that. Like everything is like through email and password, so they're the same. They're the same, bro. It's all gonna be 100 each. That's what I'm planning on. So this is the plan. I'm gonna add this to the text too. Hmm. But yeah, that's pretty much it. Everything's gonna be done via email. I'm not gonna be doing this through Discord and stuff like that. It's just easier to do on email. Cool. So do you have any more questions, concerns with this? Sounds really interesting. But yeah, I'm hoping to see you guys on there. I think there's only like 3 of you guys that are in here that are already signed up. So, and yeah, and of course, if there's like a crypto payment, just go to help center in the Discord or message me on Instagram, whichever one's easier. I'm gonna drop this in the. There we go. Yeah, let's go ahead and get to this trade review if you guys are good. Yeah, so I kind of messed up here. It's been a pretty interesting week. So we kind of saw like a full flip in dollar this week. So here's where it got a bit confusing. Not confusing, but just something I didn't like. So after Monday's closure, right? Let's go ahead and look through this. So there's only two. We were obviously expecting this to eventually get up into like the 101 point, the 102 region. Let's just say, give or take. That's kind of like where we're aiming for like a medium term sense, right? Over the next couple of weeks. And the only thing that's kind of setting us back right now is this, because we had potential for dual sweep. And then last week, I believe we were looking at this internal momentum to kind of give us that pushback to the upside, right? But then once Sunday came along, which is like right here, right? This is where everything completely changes. And this is what I mean by like, just as easy as something can fail, it can fail again and then favor that original failure. If we're looking at this from an intraday POV, this is clearly bullish, right? Clearly bullish. And we had internal momentum come into play, which caused a higher low. So we're anticipating this to go higher. But then it's until we see stuff like this, which means this now means that we have failed to break the previous high after a higher low. So maybe the dual sweep initially failed, which is based on the yellow line plus this, plus the high momentum. The initial dual sweep, we consider that to be a failure, or not completely failed, but unfavorable because of the high momentum that came into play before breaking a previous low. So we have to assume to be bullish, right? But it's only until this then occurs, right? Which is then a technically it's like an SD, right? Well, it's an SD once we break through here, but technically we have a solidified high come into play and solidify as unwillingness based on low into high. So low high retracement unwillingness, right? Technically SD. And then based on that SD, that's what changes the bias. So as of now, this is now favoring the initial dual sweep that we had covered last week, which being this, technically this, right? So we have one sweep, dual sweep. And once we had that dual sweep, that SD, that now confirms that we are bearish, right? That's kind of just the play now, right? And I don't know if you guys remember, but 2 weeks ago, when we were like around here, right, we were looking at this to potentially bring us below here. And now it looks like we're going to be below here because, like I said, we're technically bearish, but that doesn't mean that we cannot convert to being bullish again. right? There's this like I don't want to marry a bias, and that's exactly why I don't want to marry a bias like ever, because it doesn't make sense. Because if you're glued to a bias, and there's a potential that you might miss out on the real move once the real move presents itself, but you cannot analyze it as a real move if you're stuck on a bias. And so therefore, my current bias is technically bearish from an intraday sense, like clearly, but this could easily convert again, right? And there's plenty of potential reasons why that it could happen, right? First of all, this is very important. This low is going to be very important next week. This low here, very, very important, because this is that low that we talked about like a couple of weeks ago. But excuse me, now that we have the transition, dual sweep, if we fully break through here, like it might be like let's say we break here, then I think the accumulation is kind of like a bust. And by that I mean the entire accumulation potential. Then if we break through here with substantial momentum, then I think it's like GG. Like I think we're probably done so, right? But if we sweep this and we come into this inefficiency, and then based on that inefficiency, we get a transition, then now we're back to aiming for this. But as of now, I want to see how this reacts for the next like day or so, or like the next like 2 3 days, meaning like Sunday through Tuesday, just to see, because now it's either going to go do potentially this, or it could do this, or it could do that. Those are like um my three main potential options that I see this going on, because it's technically bearish. So either we're going to fully continue bearish, we're going to sweep bearish into bullish, or we're going to reverse, leave equal lows potentially, and then based on here, maybe another potential move, right? But that's assuming that this is still going to be. That's because we're assuming that this is still going to be bearish, right? And we cannot assume that until it's not, right? And like I said, the only reason that that could happen is if we have a sweep and a transition, and then another internal transition to then give us a move to the upside. That's the only reason that I could assume this to be bullish again. But until then, bearish looks fine. And that brought me to my trade. So I took this like last night, not last night, 2 nights ago, and it was based on a very, very clean accumulation here on GBPUSD. Here, right? You guys can see this. I don't know if you guys noted this, but this is just so clean. It's just when I see these equal lows get swept, right? Even though it was minuscule, I considered it a sweep, especially for looking at the second low here. Once that sweep is there, and once I see the momentum come into play, I was just like, yeah, this is good. Um, why? Because technically, there's only one thing I'm fighting here, and I'm potentially fighting these equal highs being swept. These are daily highs being swept, yes, but technically, right? We're technically bullish, let's say from low to high into retracement, but that's kind of irrelevant here. It's not really, it doesn't really, that doesn't really matter here. What matters here is we have swept these equal highs. From an intraday sense, we have big candles, right? Very big candles. So we have high momentum going into the upside. So I'm not going to fight against that unless we have like SD, right? And if we have SD, which would then be technically like, let's say here, then I can assume that we're playing against the equal highs, which is what we did weeks ago over here when we had highs swept, and then we had like the internal SDs, and then from there we played against them, right? But that's not the case yet here. And not to mention, like, we're sweeping these highs here and sweeping these highs here are two completely different things. Why? Because this is already in a bullish trend, right? And then this is kind of just a continuation of the order flow. Whereas here, the environment is completely different, where we've already broken into a CBOS. We've already technically had a pullback low. So this break could potentially just be solidification of this low. So completely different environment. One is sweeping a target, one is confirming a pullback. So completely different environment, but the behavior can be kind of traded similarly, right? And so I have to consider that, right? Does that mean that I'm bearish or I'm looking to trade against him? No, but I'm saying that if we get a transition that plays in favor of the sweep of these highs, then I will be bearish. But until then, this is bullish, right? Because we're high momentum, solidified the low now. And if we're looking at this now from an internal standpoint, the only reason why I even took this position here was because of this, right? Because my position, I'm sorry, because my position was mainly because of this. Why? Because if we're technically bearish in the internal standpoint, then I have to assume that the bearish structure is going to hold, right? And we technically have a pullback, not technically solidified yet, but once we do have structure breaks internally solidify like this, right? Then we now have a solidified high, and then based on that solidified high, we're continuing lower, and we technically sweep here. So it's technically solidified 0.2, but the pullback is technically solidified here. It's assumed here, all right, and it's assumed because there's no structure here to break. So because of that, if we're continuing structure here, here, then this break is extremely substantial, right? Because we're now favoring the original move, right? And we have technically equal lows swept, but this is a bit aggressive just because it's a bit close. So you guys remember how I tell you guys if a move, if I have to zoom in to look into a move to confirm it, then it's probably not as probable, right? This is like borderline there. So because it's borderline there, I can't assume this play to be only because of the sweep. So I needed this to come into play. So once this comes into play, right, my position is very simply the sell to buy, right? Oh, ignore that. Ignore that. I was making an indicator for someone, so just we'll let that play out. Anyways, my position is here. All right, so my position is here. Obviously, I sell at the low. Right, I will say this is aggressive. It's aggressive to an extent. Like technically, I should be really focusing on this because this is the entire move. Right, I should be focusing on that. So I did like I entered like here, and then some of it like there. But I made a mistake here. So my first TP was this, right? Because obviously, like I'm looking for the continuation from bullish structure, CBOS continuation. And I'm a little salty about this. I'm not gonna lie, I'm a little salty. TP1 was here. TP1 was hit perfectly, right? But I didn't expect this to go so deep down. And so I kind of trailed my stop like here. And this just goes back to my point on like this is why I don't trail my stop anymore. Because I trailed my stop here. And technically, even if I trailed my stop, if my trail stop is to be hit, then the invalidation is still here. So I really should have just kept my invalidation here, right? And then continue this, right? And then even now I could potentially close because we're so close to TP because my TP is the previous high. You know what I mean? So what the hell? It's trading view. Okay, that makes sense. So my TP was meant to be here. And now, and there's even like another move here last night, I think, if you guys were trading London. Um, but I don't know if this is tradable actually. So just relatively the same, a much better sweep. sweep, break, and then you see this is why I was saying that this is a bit aggressive in terms of my entry, because using the full sell to buy will 100% get you in the entry, even though you sacrifice risk reward. But if I wanted to get the best entry, then it would have been here. But here, if I was to make that same mistake, or I don't want to say that same mistake, that same decision, then the sell to buy will get you in the trade 100%. But now the refined entry might not. Right. And yes, this is hindsight, but like just follow the structure, right? Like if we're pushing down, right, and we're within a POI, then there's a transition, and so you could use the entire transition, right? The entire transition, sell to buy, you could use the entire zone. And so this is not a bad entry. I'm not gonna lie, it's not a bad entry. We're like obviously TP1 here, like these immediate, like I know, I think Sam like mentioned that in the chat, like the immediate targets are like very good. But yes, exactly, because that's the point of you taking the transition. The point of this transition is to get us here. That's the entire point of this transition. But if you align this transition with like this one, if you align them, then now you can start to aim for here, right? But the risk is that this could then transition here, which it kind of wanted to. So it's all pros and cons, right? Cause and effect, pros and cons. That's all it is. So like the point of this transition is to get us here, right? But if you align this transition with this one, then you can aim for here. But the consequence is like the potential reversal after this sweep, because we clearly, obviously, like we're assuming that this isn't even here yet, right? Because the assumption, let's say here, right? So clearly it's looking like we're going to TP, right? So we clearly don't know at this time that we could potentially flip after the sweep here, right? We don't know that. So maybe there's a possibility that this, right? And then this failure would then align with the daily equal highs that we just talked about. But we can't assume that to happen unless it happens. But we have to acknowledge that it could happen if we're trying to align different levels. Does that make sense, or is that confusing? Like if you solely focus on on moves like this to this on a couple funded accounts, you're fine. You're straight. You're straight. But yeah, I was bummed out. Like I put my stop loss here, and I'm just like, you know what? I'm never doing that again. I'm never trying my stop again. I put it here, and then like I just missed out on all of that. So pretty lame. Like I could go like I could just go into so much stuff about this. Like you guys know how I always used to say like GBP loves its deep retracements. You know, so just silly mistake on my part, but hey, it is what it is. Because yeah, this is probably going to continue. But then you see that let's see how the risk reward changes for that too. Because from here to here, I don't even think that hit, did it? No, it didn't. See, I don't think it actually it might have. Yeah, let's just say it hit there. One to two, one to four, not bad. Right. And then stacking these two would have been pretty good as well. Like one to five, one to three. That's like an 8R total. Let's say after partials, you get like 5 to 6R max. Not bad at all. Maybe like 5R, let's say. M1. I hardly get into M1 anymore. I don't see the point. M3 is usually like a pretty good equivalent to M1. But yeah, that momentum here is kind of like giving it away. But yeah, other than that, didn't see too much. This one was kind of what was giving away. The This one was the one that's kind of giving away GBPUSD. Believe here. This is when I took my trade, which is like here, I think. No, that was Tuesday. No, it was here actually, at 15. I was hoping for this to kind of sweep and go lower. I mean, it still looks like it, but it's just so messy. I don't like this anymore. But yeah, did anybody take any trades this week? Any quick case studies before we head out? Sometimes if you stick to M1, you can lose clarity of the overall picture. Yeah, I know. I know. But it's like, but also don't see it as noise, you know what I mean? Like don't see it as like M1 is not noise. M1 is noise if you're not aligning everything. Because the problem, like the reason why I like to stick to like M3, M5 is because we're associating the scalp POV with like the intraday slash major intraday POVs. You know what I mean? So if we're already acknowledging major intraday, minor intraday, and scalp, then if you want to keep going deeper, like you're making it so much more complex. Because remember what I just said about this? You're just overcomplicating it for yourself. Like if you're on M1, you shouldn't even be going above M15 at that point, right? And unless you're looking, and you should be looking at maybe like H1 targets or H1 sweeps. But like how we said here, like this, right? How if we're aligning this with this and we aim for this, then we're not accounting for the possibility of this reversing on us. So this is just with like M5, M15, and like H1. This is just with those. Now imagine trying to go into M1, and then now we're seeing this, right? And you're now anticipating maybe this is a sweep, and so you want to sell now because you're trying to complicate it. You know what I mean? And complication is not bad, but it just makes shit way harder. That's the whole point. So M1 is not noise; it's just additional stress based on what you're already using. So it may not even be worth your time. It might just be worth your time to stick to M3 and 5. Especially when I see people on like in the 15 second, like, bro, okay, like, okay, bro, here we go. Like if you're a 15-second trader, you should be looking at M5 biases. But if you're looking at like M15 biases, H1 targets, and you're on the 15 second, I know you're lost. Like I know you take a bunch of losses or you're lost. But hey, if you could do that perfectly, like congrats, bro. You're actually able to really understand like 4 to 5 to 6 levels of structure. And I can commend that. But I just think for most people, like you're kind of just overcomplicating it. You know what I mean? So it's not a bad thing, but it's like this stuff is already hard, you know? All right, does that make sense, guys? Does that make sense? Yes or no? That's something I do want to cover in the workshop as well for the solidified point workshop. Premium chat, wrong chat. Shit. But yeah, and after the workshop, the goal is next to update the indicator, the structure indicator. I want to see if I can figure out how to implement solidified points directly. And then there's going to be like 11 to 12 levels of structure. So like if that's the case, then I want to figure out the best combinations because I'm starting to figure out trading view now from a backtesting sense, like to make strategies and stuff. Because I'm helping my friend out with like indicators and like stuff like that. You know what I mean? So I am I'm starting to figure out trading view and pine code and all that stuff. So I do want to make a new version of the indicator soon. And obviously it's a free upgrade for people who already have it, but okay, this is good. This is good. Right? I want you guys to have you guys noticed this? Like if your entry goes directly, have you guys ever noticed this? Like when your entry just goes directly to TP? Yes or no? Do you know why that is? Do you know why that is? No. It means that your entry was perfect. It means that your alignment was perfect. That's what it means. Like this trade went directly to profit and potentially TP1 here, TP2 here, right? But this is because the internal, well, let's just say I don't want to, I need to find better terms for internal external because there's a lot of internal externals to different levels, right? So like let's say this. So that means that 1, 2, 3 levels of structure. Well, 4 levels of structure is now aligned, or 3 to 4 different aspects of aligned. Right. So like the overall, just based on this image, it looks like we're overall bearish. Maybe from like a M5, 15, M10. Then the internal leg, that being this, is bearish. So that's 2 alignments. CBOS, right? So that means that we're anticipating this to be the end of the pullback of then the internal leg. So you could even argue that there's another level here, right? This one is an assumption, right? I'm assuming this, right? So I'll actually discard that. We have clearly on this image 1, 2. Why is this 2? Because this took a high and then it led to breaking this low. That's why this is its individual level, right? So because of that, we have CBOS, which means that we have solidified, excuse me, we have solidified technically this with this break, right? But technically, you can argue that this and this are both levels. So you could even say this level and this level are both the same because they both did the same thing. They took a high, led into a low, took a high, led into the low. But this one led into breaking this one, right? So we'll just, to make it less confusing, 1 level, 2 levels, right? And then this would be 3 levels. This is level 3 because you're seeing the micro transition here to here. And that's what's giving you the perimeter of the entry. So the last level of structure should be the one that's giving you the perimeter for the entry. And that's either through a model, momentum, whatever. But that means that your entry was now aligned with the internal external biases. That's why you see your entries go straight to TP. That's why it's that little detail at the end that makes it all kind of come together. Because if you mess up this part, this last part, then maybe all of this, the rest of this bias stuff can go to shit. You know, it'll just go bad. But if you have all of them, actually, okay, should be fine now. But yeah, let's go ahead and wrap this up quickly. Right, 1 alignment, CBOS, 2 alignment, right, and you can argue this to be another level, but I don't want to overcomplicate it for you guys. But either way, this when your entries go straight to TP is because of alignment. That means that your bias and your execution came into alignment, and your bias can be determined by 3 to 4 levels, and your entry could probably be determined by 1 or 2, because clearly this is internally bullish. So then this would consider that to be a transition. right? So even though this is still technically bullish, the internal level, it's going against you from the entry POV. This is correct because it's aligning with the rest. So the alignment is what causes your entries to go directly to TP. And this is like something that's probably like the biggest thing that you can master, right? Because like look at the position, right? The position goes straight into profit, straight into our targets, right? But that's because the transition aligned with the model that we're trying to trade, which aligned with all of this. You know what I mean? So once they come into alignment, that's how everything kind of just starts to work out. And the amount of levels can be relative. Like there's no set amount, right? Because it's every pair is different. And like you guys know how I used to say things are like based on tendencies and stuff like that. Well, yes, but now by tendencies, I'm really referring to multi levels of structure, and so like different combinations. So like think about it like this: if there's 10 levels of structure, that's 10. That's so many different possibilities in terms of combinations. Like, do I have to map that math out for you guys because that's very complicated, or does that make sense? Like, do you know how many combinations we can get with 10 levels of structure that can either be, let's say, bullish, bearish, unbiased? Do you know how many combinations we can get? Like, out of 10 levels of structure, each one can be three. Like, I don't even think I could do that math right because it's more than 10 to no. It's more than 10. It's like 10 to the 3 to the 3. Like, it's no. We're gonna have to hold on. We're gonna have to ask Claude for this. Hold on. That math is very complicated. Okay. That math is super complex, guys. Hold on. All right. I hope it doesn't start. Oh, here we go. Wait, what? No, it's okay. Here we go. Okay, so it's not 10 to the 3, it's 3 to the 10. Sorry. 3 to the 10. I had it backwards. Do you see what I mean? Do you see why it's it's very complicated now? So like think about it like this. Okay. Now, this is kind of just going to prove my point of what I was telling you guys about earlier with the seconds time frame stuff. Look at this. If you're associating, let's just say 4 levels at a time, right? There's like 81 possible combinations that you might have to think of in terms of combining biases, and like this doesn't mean that like all of them have to be aligned or all of them don't have to be aligned, or that's not what I'm saying. I'm just saying that there's a certain amount of possibilities based on certain levels of structure, and the higher that we go, it exponentially grows. So like if we're focusing on all of these levels, all of these levels, and then all of these levels, like you're then looking at like 10, like 7 to 8 levels compared to like 4. You know what I mean? Because you need the internal to break to give you a pullback that favors the external. Does that make sense? Like you need the internal to fail to begin the pullback of a continuation on the external. You know what I mean? So like if you're still like trying to get into 15 seconds and like M1 and all of that, while you're trying to make biases from like H4, H1, like you're just making it so much more complicated because there's so many more combinations, so many more possibilities. That means there's so many more things that can go wrong. Does that make sense? So I guess you can see the math now, right? You can see the math now. So the easier it is for you to understand or just consolidate how many levels you're looking at, the easier it is to maneuver through everything. So right, and then this is like, and then also when you're considering levels, right? Like there's even more combinations than what I'm showing you because then you're trying to combine models as well. So like it's one thing to align structure, it's one thing to align models, it's one thing to align structure and models. And like that math goes even beyond that. Like it goes even more beyond that. If you wanna have your mind blown quickly. All right, let's see. Let's blow up the math even more. You see what I mean? So you're not adding a different element. So you're multiplying the math. And this is what makes stuff very hard to automate. This is what makes stuff because then like so much is assumed with a lot of these positions that you don't even know that I haven't even noticed yet. You know what I mean? But I know that they're there because they've already been shown to me since I started trying to automate the stuff. And then trying to then simulate all of this stuff is it just way more complicated. You see what I mean? But yeah, that's what makes the whole like combine like alignment thing like kind of difficult. And it's very difficult to explain too. But as long as you acknowledge that it's there, then you can start to open your eyes to it a bit. Okay, here, this is alarming. This is why this is TP1, because this reaction confirms the validation of the POI. Right? That's why this is TP1. And it's because of situations like this that I was like looking at this, right, as this reaction, and then I chose my stop. So that was the reasoning behind that because I didn't want this exact thing to happen. Uh, yeah, I didn't want this exact thing to happen. You know what I mean? Okay, I like this one. This is good too. There are equal highs here, but that's unwillingness. But then this engulfing is very good. I like that engulfing because that engulfing offsets the potential reversal based on this sweep. So this sweep could cause you to be bullish, but then this engulfing, right? And then that is invalidating this, right? So just how this failed to be bearish as of here, this invalidated the bullish. But either way, like TP1 has to be at the low. Like you have to add more TPs. This is TP2 right here. That's TP2. Like you're very ambitious with this target, you know? Yeah, I see. So TP2, right? You see how TP2 hit and you started to get a reaction. So once you see that transition again, right? Like this is even another potential go lower. But you cannot assume this entry to go to full TP without this happening, because this could have came out in many different ways. Like this could have just completely broken through this and then it invalidates everything, or you can stick to this and then, it's just a lot of other things that could happen. But this is good though. I like the entry, but I just want you to know that the entry, the engulfing, is invalidating that internal sweep. I think that's the biggest detail here. But yeah, that's good though. I'm not opposed to any of the trades, to be honest. Right? Does all that make sense, guys? Yes or no? uh no. We're bullish, yes. We're bullish, yes. Um, but this is not confirmed. Like this is still internally bearish. Why? Because you have an LG. So I would still anticipate this to go lower. So like you're fighting against this momentum, right? Because this is technically a solidified low, right? And then that's broken. So you have to assume this to continue bearish. And it's until you see the full break that you can then assume for that final leg to the low. I mean, that final leg to the downside to be broken. Because from here, you can see that this broke that, and then we have CBOS, that into that. And so you need the solidified highs to be taken. You see? Yeah. So like you have to wait for this. If you wait for this, you're straight. You're good. Because then you can align this with that as TP1, and then my target is TP2, right? So yeah, you anticipated this early. So I have to figure out a way to this is what I want to fix with the new version of the indicator. Is there's different levels of structure. How can that, like what kind of combinations I can probably simulate like a bunch of different uh like combinations of biases, because I'm gonna just use the same biases from the first indicator, but I could just add more levels of structure with like the solidified points. I don't have that on here. Mm, where is it? Where is it? Where is it? Where is it? There we go. I think it was this one, the good one. So you see, like I want to be able to know as many levels as I can on every single time frame. And then I think I'm gonna probably stick them to each time frame. So that way each time frame could have a potential bias. And I could do like M1, M5, M15, M30, H1, whatever. But the math will be stuck to the time frame because it's really hard to align M1 levels of structure with like M5. It's really hard to like code the math. Like you see how it's level 6 and then like level 1. I mean level what 5? Yeah, you see it's really hard to map them together, but that's just because TradingView gives you like a set amount of data no matter the plan. You see, it only gives you a certain amount of data. So like once you scale up to the higher levels of structure, like it's hard to align them because the data is limited. So on M15, you only get to June 1st of last year, but on H1, it's like way beyond that. So that was like the complicated part, but that's what I'm trying to fix with the new indicator. But yeah. This one, no. It could work, but you're very bullish already. Like you have a CBOS with momentum. You just swept this high. Like you need a transition here. If not, you're guessing. because you're potentially fighting that sweep and you're overextended. Yeah, you see, I would have needed a transition here. I would not have confidence to just buy the continuation here. But that's fine. The TP is fine. This TP is fine. Sure. This is fine. But like I would expect this to just aim me here. This is TP1. Like this could easily like do something like that because this is still bullish. So this is like a reversal here. Yeah, you see, so TP1. TP1 is fine. But yeah, I'm glad this worked out. Like this, you could say that's a good aspect there. But yeah, I think they're a bit aggressive for me. This one, it's like this is my trade, right? Like I'm looking for bullish because of this. So it's until I see like, let's say I see this from here, then I would consider this to fail, and so then I could continue lower. But I would play against this sweep because this breakout is favoring the sweep. Yeah. I don't know. I don't know what I'm looking at here, bro. I don't know what I'm looking at here. Yeah, I mean, sure, internal bullish continuation, but like what's the point? What's the point of you showing me this? I mean, yeah, that's SD. This is SD. Okay, sure. I mean, I don't like I'm not gonna validate it. Like I'm not gonna say, yeah, this is right, but this is SD. This is what I was looking at. Because remember last week I was still bearish. I was looking at we were looking at this, and then I was looking at this to potentially go lower, and then I was hoping for this to continue lower. But then you have the SD here. That's a very clean SD. This is super optimistic. Super optimistic. Like zoom in. Yeah, I need you to zoom in here. Like the entry is good. I'm not opposed to the entry. Why? Because you have a unsubstantial new high. You have momentum come into play, CBOS, but it's still technically bullish. So then you wait for this. But I personally probably would have waited for this to fully break, and then this is like the entry, right? And then from here, TP1, uh, potentially TP2, potentially TP3. Because like if you're assuming like think of it like this is unsubstantial new high, this is high momentum, this is good, right? That's one potential reason to want to go lower. The high momentum coming into the low. Then you have the POI here, but that's a high risk POI, very aggressive because we're still internally bullish because this is CBOS. So then if you're assuming this LG here to solidify this POI, I think that's a bit wrong. Because this is still internally bullish. So to assume this POI, I think is very aggressive. That's why I would say wait for this to break, and then you have the buy to sell. You see what I mean? And then if you're really like, obviously, like you want to TP, at some of these lows, you want to take some type of profit. And so then from here, it's like after this big wick, like I first of all, this wick would piss me off because it didn't take the low, which is concerning. But this is equal lows. But like I said, like I think this was a really good point I made the other day. It's like don't like equal lows can't be like a bias. Like you can't use that to your bias because it contradicts unwillingness. It's like all I know is that there's equal lows here, but that's unwillingness. And there's a big wick. So then there's CBOS, and then you could say there's a POI here or whatever. So then this reaction, like your trailed stop has to be here. This is like a very good trailed stop aspect if you're not just leaving it at break even. And then this is like a high risk buy, but that high risk buy aligns with this continuing higher. So like this would be the high risk buy, but it just looks good because of the engulfing. You know what I mean? And then from here you aim for equal highs or previous high or previous high. I don't know if previous high was met. No, it hasn't yet. But I like these types of setups. They do pop up on yens relatively often. Right? So does that they haven't been sustaining well recently? Yeah, I mean because yen is fucking bullish, bro. Like you're fighting a lot. You're fighting a lot here. Oh, this is I actually haven't even looked at this week. That's crazy. But you are fighting a lot here. Yeah, like I gave up on the whole bullish bias. I mean, a bearish bias. Sorry, I gave up on that like last week, even though there was like this big move this week. Holy shit, that's crazy. Actually, yeah, you're fighting a lot here, bro. Fighting a lot. You're fighting a lot. I would not want to sell here, bro. This is why I don't trade like Nasdaq and shit like that because like it's been bullish forever, and so like how do I like I don't want to feel like I'm overextended, but like oh being overextended is also not really like it's an assumption, right? To think that we're overextended unless you like have other levels of structure to resemble or to like reference. But like this is just super bullish, and this is like a full transition. Like look at this. This is crazy. Like this is crazy. And you're approaching a monthly high, so that would give me a reason to not want to buy. But like this is the monthly, so like the daily could still be bullish, and if the daily's still bullish, then the intraday could probably still be bullish. So then it's just confusing. Like it gets I don't like it. I don't like to to try to maneuver through stuff like that. But yeah, I think that's it's good for today, guys. Let's see. I know a couple people missed out on the like a couple people did join for the that discount I gave last week. Yeah.